Just want to show how significant my Fidelity screen looks here with everything in the red, CMG, burritos are even. And this is SPXS, which is inverse the market, so that goes up when the market goes down, but everything is red. Everything is significantly red. Netflix down over 4%, Amazon 3%, biotech sector over 4%. Tech sector and the financial sector both over 2%, and the only wall of green is all USMJ, MedMen, IAN, CWeb, GTII, OH, CURA. So it clearly stands out. They weren't significant days for all of them. Some of them had some big days. But again, on a day when the market is in free fall to a certain degree, to see that kind of strength, it absolutely stands out to us. So just to drive home that point a little bit more, this is the USMJ holdings for the US Marijuana Index sorted by the green on the percent side, and you compare it to Canada, 3, XLYNN had some decent days, but everybody else red, and in the US, completely different story. This is the most significant difference that we've noticed, and it's 2 days in a row now. So the question is, how long is this going to keep up? And we're going to keep watching. You know, do we see this bull strength continue, specifically when the S&P 500 gets a real bounce going after all of this weakness just today? All right, so getting into the analysis, we're looking at Canadian names. We'll look at the U.S. names tomorrow. There's certainly a lot to cover, and the main story here is the weakness in the major names. So obviously the S&P 500 saw a lot of weakness. In the recent past, we've been talking about how CGC was not exactly positioned well to absorb any S&P 500 weakness, and that is because during the stretch where the S&P 500 had a big 8 days in a row of solid green, this is what CGC was doing, which was obviously not very impressive. So, as we know, if we get a break, we have to see multiple levels break and follow through. So the bull break only broke one level, couldn't break the second level, and then had a pullback, big upper wick of profit taking. The difference here is we closed at the low of the day, so that does show the bears still have momentum in their favor, but we need to see breaks of 43.71 and 42.91 in order to be looking for bearish follow through. Pretty clear setup this morning. As for going in short with the break of $45 being the signal, we held $45, we held it a second time, and then when it finally broke, you can see the big volume spike with stop losses triggering, and we ended with a weak close at the end of the day, which was an hourly bear flag. And again, if you look at the S&P 500, this is exactly what the S&P 500 did today, and we ended with the new low of the day bear flag. So we are watching for oversold conditions, keeping in mind that on these major names, when you're in a daily uptrend and you're seeing hourly oversold bounces, you can be more confident than when you are in a daily downtrend and you see hourly oversold bounces. The bounces have less pop. The RSI levels can get more extended to the downside. It's not equal. So we have lost the daily uptrend at this point on CGC. So we zoom out to the weekly chart and we now look at the most important support level on the weekly, and that's down at 41.68. And we're watching for the potential of a monthly equilibrium playing out. And that's what we're watching on the S&P 500 as well. But if we break that low of 41.68, we have the all-time high, the low of the significant pullback down at the bottom, a lower high has been set, and if we break that level, we're then pulling back looking for the monthly higher low. And it's the same thing for the S&P 500. We're watching to see, are we going to top out and form a monthly lower high and give ourselves a tightening monthly range? So if this scenario were to play out, we could stay within this range through the summer. That could fit the summer lull narrative to pull back another couple months to find that higher low, and then we would look for a bounce and a lower high, and then we would look for this monthly equilibrium to break sometime probably around the end of the year. That would make the trading environment on the MJ space, specifically the Canadian major LPs, it would make it less favorable for short-term traders. And that's just because there's less volatility as the long-term ranges tighten. So it's absolutely something we're watching for. But as far as the short-term goes, we're looking for oversold bounces. So if we get the gap down open on Monday, we're going to be watching 43.71 support. The hourly RSI will be oversold, but we're not at extreme levels. And the 4-hour RSI will be getting oversold as well. More confidence in my oversold bounce plays if I have the 4-hour or the daily RSI oversold as well, or if I'm in a daily uptrend. Neither is the case at this point. We'll keep an eye on the 4-hour RSI on Monday morning. And of course, we're going to be watching the S&P 500 for what kind of weakness we see there, because as we could see this morning, the CGC oversold bounce did not get going until the S&P 500 started to get its bounce going. And it was really, again, I mean, I don't know how many times I got to do it, but I'm going to keep doing it just to drive it home. S&P 500 overlaid on the 5-minute time frame. in the background here, and we look at the correlation today, it's the same chart. I just had to double check. Am I putting up the same ticker twice? No, it's CGC and SPY. Same chart. Tick for tick on the 5-minute time frame. So, Cron broke bearish first on the daily time frame today. And we broke bearish below 2036. We broke 20 psychological. The oversold bounce in the morning did play out, but again, took a little while to get there. Everybody on the Canadian MJ space, we were watching these oversold bounces on the hourly. Took a while to get there because SPY took a while to get there. 1950 broke as well, increasing bear volume. This is a much more convincing bear break at this point than CGC because Cron has been showing us a bit more weakness with the daily lower high and now dropping to the clear lower low. The weekly time frame here, we have the high, low, couldn't break the all-time high. Most important short-term support level is going to be down at 1872. And we can see that below 1872 on this daily chart, there is not support well established. So if we're looking at the monthly time frame for Cron, we're in monthly consolidation right now. And that's by losing, actually we technically haven't lost the weekly, well I could say yes, we lost the weekly uptrend at 1950. So we are in monthly consolidation and we're looking for a monthly higher low to form. So again, longer term, broader spectrum of consolidation. And I don't usually use these monthly charts, but there are plenty of the setups here where it is more clear to me on the monthly time frame. And we're just going through all the different time frames to establish most likely scenarios. The 4-hour time frame on Cron is down oversold already, and the hourly RSI is as well. So it's much more beat up than CGC in the short term. So if we see gap down opens, we'll see if the Cron bulls are buying with those RSI levels. Again, dependent on SPY. Let's do a little overlay game here as well, just to see. And I bet, I haven't even looked at either of these correlations today other than watching the trading action. Again, just the same exact charts. Very significant correlations to the S&P 500 today. ACB, still pulling back on the daily. We are not at risk of losing the daily uptrend. So keep that in mind. We definitely need to see a hourly trend change to form the daily higher low. We're not nearly as beat up because we didn't drop down to a new low of the day, but only by 1%. So not a huge difference, but just holding on a little bit better. If we see further weakness on Monday and break 890, the hourly RSI will be down in the teens. The 4-hour RSI will be approaching oversold. But the difference between ACB and those other names is we just had this huge run up on that news of the activist investor and really, feeling the S&P 500 strength. So on this pullback, we will look for the daily higher low, and that's the difference between the other names. It is a daily uptrend at this point. We zoom out to the weekly chart, and we're just consolidating on the weekly to form a higher low above 666. So a lot more space to work with for those bulls. APHA giving back the entirety of the bull move after the double top at 1068. We're now looking down at 936 and 915 with the week close, the 4-hour RSI not as oversold, the hourly RSI not as oversold because of the bounce from the low of the day up to the high of the day, a nice 3% bounce, pulled back with the market but didn't hit a new low of the day, so in line with what ACB did. So not as oversold, and the weekly time frame for APHA, we've got a good old equilibrium, high, low, lower high, and the higher low, I would call it the same candlestick, 915. Another lower high, and we'll lose that weekly higher low if we break 915. That's potentially in play this coming week. So just to compare those four, we have Cron the most beat up on the hourly and the 4-hour RSI. We have ACB still in a daily uptrend. Technically, APHA is still in an uptrend, but not as strong as ACB, not as much room to work with. And CGC doesn't really stand out for any of its own merits, other than we're going to be watching it. And SPY, everybody's correlated to SPY. SPY is running the show. It used to be CGC running the show. Right now it's SPY running the show in the short term. TLRY, daily time frame, big pullback. Inside bar broke bearish early in the morning. And the next support is 64.45. So the weekly time frame just gave us a lower high on these bounce attempts. Not much follow through at all. Bears are in control of TLRY. And after 64.45 and 64.06, there is no clear support established. That can get ugly. The bulls really want to hold that $64 level. OGI pulling back after the double top yesterday. We are still in a daily uptrend here as well. You could make the argument that this was our higher low. that I wouldn't argue too much. Either way, the most important level for me was 879, a much more clear support level established. And here we are holding that level today by 10 cents and trying to bounce. And this is a much more convincing bounce than any of those major names because we didn't end with the end of the day dump. The bulls held on. We have not changed the hourly trend. We will need a higher low and then a break of 932 to change that hourly trend. But just the fact that compared to everybody we just looked at, we didn't have the 3-hour bounce into a flush down to the low of the day like they did. So that's telling us it's holding on a bit better. And that's why we have a long lower wick on this daily time frame where some of those other names don't. Hexo on the daily chart opened right at resistance, couldn't break 912, broke support, still in a daily uptrend here as well. Looking at RSI levels, the 4-hour RSI is not anywhere near oversold. The hourly RSI is not either. So it's the same setup in terms of candlesticks and trend as everybody that we just looked at, most everybody, but it is not as beat up. So it's still in a daily uptrend, but it's not as beat up on the shorter term time frames. Hourly lower high is now 871. For everybody, we have an hourly lower high established on the afternoon bounce attempt. That's the most important resistance level to be watching first thing. And if we break 843 support, the next level on Hexo is going to be down at 820. Again, still anticipating the daily higher low, but it's going to take a market bounce to get this sector bouncing, in my opinion, with how strong correlations were today. TRST, 4-hour equilibrium scenario we highlighted in the video yesterday is playing out. So we have the high of 1348, the low of 1268, lower high of 1336, higher low of 1274, and just pretty much a double low to be watching and a clear lower high in a tight range. If the 4-hour breaks bear, we zoom out and look for daily consolidation down towards $12. And of course, if it breaks bulls, that's a great sign. And I would be surprised if that happened, but if it did happen, we'd look for continuation on the daily. VFF, new all-time high today, but not immune to the market weakness. Let's see what kind of correlation we have on VFF. So VFF and SPY, there you have it. So if you'll notice, when was VFF ever correlated with SPY? I wasn't watching VFF more than a month ago, but I'm assuming the answer is very infrequently. Why are we seeing this correlation? Because we uplisted, we're trading on a major exchange, and the bots and the algos are synced together, just like we are now. We're in the same group as CGC, Cron, ACB, everybody with SPY correlation, and the 5-minute time frame is tick for tick what SPY was doing today. VFF doing that as well. Look at yesterday. Let's zoom in on yesterday's scenario. Most of the MJ sector did not see bullish correlation with SPY yesterday. VFF saw it very clearly. So this is telling me that VFF, out of all of the names that I'm watching in the MJ sector, if I had to rank who is most correlated to SPY with just the last, let's look at the last 3 days. With the last 3 days of action, it is clearly the strongest, in my opinion, the strongest correlated name to the S&P 500 in the marijuana sector, both US and Canadian. Something we're going to keep an eye on. But again, we're looking for a daily higher low to form. This is a choppy chart. I mean, let's go back to VFF. It's a toppy daily chart. We got to be cautious when we run this hard and the weekly chart looks like it does, and we're starting to see a bit of weakness in the market. So we're looking for the 4-hour uptrend. Anything above 2034 keeps this level intact. The daily chart, that's that 2034 level. The daily uptrend will be lost if that breaks. And then we zoom out to the weekly and we look for our weekly consolidation to form a higher low. So as I've talked about in other videos, you have already decided if you have VFF shares at this point, are you going to sit through weekly consolidation or are you not going to? And you should have that set as a game plan right now because we're probably going to enter a time period where we are 15 to 30% away from the all-time high, seeing that weekly consolidation. Not confident it's here just yet, but getting confident as we're seeing some of these signs that this consolidation does need to take place. TGOD on the daily time frame held the low of yesterday, 475 with a double bottom. That's a key support level first thing. If we break 475, we're going to be looking down at 445 as the next support level, and anything on the hourly under 495 is just a lower high. And I bet I'm just running through all these now, but it's looking like we've got significant correlation on TGOD as well, which is, again, a name. These are names that I have not noticed significant SPY correlation with, and everything is standing out today with that correlation. So add T-God to the list of SPY correlation. I'm going to be that old guy at 75 years old who's rambling about correlations in the park with drawings all over my walls. So we're looking for the daily higher low to form. We need the hourly trend change for that daily higher low to form. Look at this 12-period daily exponential support. We've held 3 different consolidation periods with these higher lows. So keep an eye on it. We're testing that support on Monday, it looks like. And on the daily time frame, not a correlation to SPY. All right. So we did break this 4-hour equilibrium bearish, and the bear break was at 74 cents, and we dropped down almost 10%, about 8% to the downside from that support level breaking. And look at where we're back testing and rejecting. Previous support is now acting as resistance. So we are looking at, on the daily time frame, anything under 79 is a daily lower high. So the burden of proof is on the bulls to change this daily trend. This is a nice little bounce from oversold conditions, but if we don't break 79, it's just a lower high, and it keeps the bears in control. And our new support is 67 cents. Fire. Looks like the wrong ticker here. Maybe not. Haven't looked at Fire in a while. That long lower wick threw me off. Wow, we did see that flush. Congrats to those dip buyers. That's a 10% bounce in an hour. I guess it was 2 hours. So 230 is the resistance level with multiple tops there. If we can't break 230 on Monday, we're going to pull back and look for an hourly higher low compared to 208. Daily time frame, 236 is very key resistance. This is a pretty key weekly level. The V-shaped recovery on the weekly didn't change the trend. We set the higher low, and here's the bulls trying to confirm the trend change. And if we clear 243, there's a lack of resistance nearby. Surprised by how the bull action has been here, that haven't been hearing more about Fire just on social media or whatever. So 230, 236, 243 are the key resistance levels. And as far as the daily higher low of the uptrend, certainly getting thrown off by that flush. I mean, that flush alone would have me pretty cautious. Just the fact that we can take out support from 2 weeks of trading in 1 hour on that flush. But the bulls did recover. CXXI, looks like we have a 4-hour equilibrium forming here. Got to sneeze. Excuse me. So this is a red flag. I mean, look at the volume. I guess it's still a couple million, but just to see volume completely dry up like that. Anyways, we're looking at a tightening 4-hour range where we have the high of 229, the low of 193, lower high of 220, and if we break 193, we will change the 4-hour trend, which means zoom out and look for a daily higher low to form. 193 and 184 are supports in the short term. A little bit toppy. These upper wicks definitely tell me there's profit taking going on the daily time frame, and the weekly chart showing some upper wicks as well. And we'll see if that bear break of 193 does occur or not. NRTH daily chart, 169 is the high, 119 is the low, 154 is the lower high, and here we are looking for the higher low compared to 119. Have to change that hourly trend for the daily higher low to be established. We're not close to doing that. We're looking for an hourly lower high to form. We'll need the higher low and higher high, and then we'll look for this daily equilibrium to continue to tighten up into and through next week. Probably towards the end of next week, we'll be getting ready for a potential break. Weekly inside bar this week, and we'll probably see the week start next week with a weekly inside bar as well. XLY stood out today. So the weekly starting to get attention, 60, 101, higher low was 70, and there's our bull break. So it's a laggard move just in the fact that it's now changing the weekly trend when so many other names have already done so. Next resistance is 120 on the weekly chart. Daily time frame, pretty healthy consolidation, declining bear volume after the big bull move. This is still potentially a bull flag. If the bulls can come out first thing Monday and break 105, that will confirm this bull flag. And our new key support is 91 cents for the bulls to try and keep the daily uptrend. So weekly trend change underway, but the bulls do want a bit more convincing follow through with one more higher low and higher high on this daily chart, which would be a bit more convincing. EMH, weekly time frame, stairs stepping its way up, clear higher lows on that uptrend. Daily uptrend, anything above 391 is a higher low. Looking for a change in trend on the hourly to indicate that the daily higher low has been established and it's a clear downtrend at this point, not too close to changing at this point. So, daily higher low looking to form. I want to look at the monthly chart here just because this weekly bounce. So we'll be looking for a monthly lower high compared to 592. A lot more simple charts when you zoom out to the monthly time frame. A lot less candles, price levels a lot more clear. But it's all about the weekly uptrend at this point, and the monthly lower high will be set when the weekly lower high is set. Have to change the hourly trend. So, bottom line is, for the Canadian sector, what's most important? Probably the S&P 500 on Monday, with how correlated we were today. And we're going to see if the S&P 500 gets any kind of significant bounce. The hourly RSI on SPY did cool off. Again, I'll do the market video tomorrow at some point as well for the S&P 500. Yield inversion curve is what a lot of people are talking about. And I'll mention that as well. Hope you're well. Have a great weekend. Do good things. Tune into the USMJ video. A lot more bullish action going on right now in that sector. And I'm curious to see what is going to happen in that sector when SPY bounces. Is that going to add more fuel? And it's just, there's a clear constant shift going on right now. Canadian MJ linking up like a magnet to the S&P 500. USMJ seeing an influx of money doing its own thing. And it's a never-ending soap opera of correlations and drama, and it's fun. See you soon. So, Adventure Time, Chapter 14 or something. We are now crossing the Colorado border into Utah. This is a picture of some fire ants accepting my peanut bribe. I've been feeding bugs my whole life. I used to feed spiders in my windowsill cold-cut turkey or ham, and they would eat it. And I've been feeding ants. We feed them sugar. Fun to just watch. I just watch bugs. Anyways, these are bones from dinosaurs just along hiking trails. So this is a spine. This is Dinosaur National Monument in Utah, and they have street names like Brontosaurus Way. There's a big femur or something like that sticking out of a rock. Pretty crazy that you can just see these dinosaur bones. There's my first selfie of the trip with my new friend. That's some more petroglyphs just on rock on the side of the road. And pretty cool to, try and interpret what they were suggesting. Who knows? But common themes of spirals and coming off of arms. Not sure. Anyways, it's just one of these spots that's on BLM public land where there's your dirt road, there's your scenery, and there's a whole rock wall, and that's just an art studio for ancient man thousands of years ago. You can see the little drawings right there on the left, some of them. And then there's just a spot you could just camp by a lake right over there. So a nice little adventure. There is nothing developed aside from a parking spot near the lake. There's no signs, there's no people, and it's great. So I was just walking around looking at all the different art. That's where I set up my tent, and I got woken up by a moose the next morning walking through this river here, and the moose ended up just sitting on the side of the river for a good part of the day, and I spent my afternoon on this piece of land there. It's mushy sand, and I would just run as fast as I could from one side and then just slide on my bare feet and go 12 feet. It was just like a mud pit. I had a lot of fun, and there was a rafting crew that floated by while I was acting a fool. And a storm came out of absolutely nowhere, just right over the hill, and these big bursts of wind, and this tent ended up in that water. So I was not prepared in terms of I had not staked it down yet. And again, there was no wind on the day, and it was just like all of a sudden really dark clouds, winds going nuts, and I jumped in my car to avoid the rain and had forgotten to stake that bad boy down. So didn't get soaked, didn't sink, but definitely made its way to the water. More shots of the river from the other side. And that is Utah. So didn't expect to see a moose in Utah, but did. So we're going to go over to Canyonlands Arches National Park and getting towards the second half, towards the end of the journey at this point. So I appreciate you watching. Have a great weekend. Check out the USMJ video. Check out the SPY market video. Do some good things. Have a party. Make a friend. Pet a dog.